Kerry, do you see a scenario in which oil makes another leg higher, $100 a barrel, if not further, and that starts reigniting the inflationary pressures on a global context because of the China reopening?
There's many factors which are driving the oil outlook. Obviously, we've got Brent back at around 87, which is not too high. Our view is it's going to be between $85 and $95 a barrel this year. What would really push it over that would be not necessarily a huge spike in demand from China, because I think there's still an issue there about where the Russian oil is going, and that's not really making it to the main markets, but maybe going into China. And thinking about really the supply side, and if we saw further moves by those OPEC plus nations to try and keep the oil price around that $85 to $95 a barrel without letting it go too high. So the oil energy price outlook, obviously there's a risk to see it spike higher on some of this renewed confidence around that China demand story. I think we've got a ways to go before we might actually see that impact the market. And largely that's actually being reflected in today's prices. So unless we see an absolute surge in growth in China, which I think is still difficult in the 4 quarters ahead, given some of those structural limitations there, I don't think we'd expect to see the oil price move back over $100 a barrel this year.
And there's a sense, Kerry, that the tensions between the West and China and that animus, whether it's over trade, whether it's over chips and high tech, that is back once again. Is that going to undermine this renewed confidence with regards to the reopening in the global economy and global markets?
I don't know if it's the case if it's back. I just think it never went away and got overshadowed by other factors. I think those strategic relationships between China and the US in terms of that strategic dominance, obviously the views around Taiwan, they're always going to be there. You have heard from many China officials saying China is open for business now. I think that that's going to have a material impact on sentiment towards the region. But, you know, by and large, we have to remind ourselves that these geopolitical events and geopolitical overlays are going to be in the background, aren't really going to go away. So I think that's something to contend with in the long run. But in the near term, the meaningfulness is really coming down to the fact you are going to see that activity in China pick up. 20% of the world's GDP is suddenly coming back online. I think that's going to be quite important for investors looking for opportunities where they haven't had them in the last year or so.